Stop refreshing your portfolio. Put down the phone and listen to me very carefully. Yesterday, the screen in front of you said silver was worth $117.71. By the time you finished your lunch, that same screen screamed $104. Billions of dollars in market cap, wealth that belongs to people like you, was vaporized in a single afternoon. Then, like a ghost in the machine, it clawed back to $113. Most people call this volatility. They call it market health. I'm here to tell you it's a crime scene. One of these numbers is lying to you. The screen says $104, but the physical vaults are whispering a much different story. By the end of this briefing, you will know exactly why the paper market is fracturing and why the great decoupling is no longer a theory, it is a mathematical certainty. The algorithm is actively trying to suppress this data. They want you distracted by the red candles so you don't look at the inventory levels. To prove you're a real person and not a bot programmed to ignore the truth, I need you to do something right now. Comment Wealth Unwired and the exact time you are watching this briefing. Let's show the gatekeepers how many of us are awake. If you're holding the line while the paper shorts are panicking, let your presence be known in the war room below. We aren't here to speculate. We are here to process the evidence. Look at the technical data. On January 26, 2026, silver hit a record high of $117.72. The 1.618 Fibonacci extension was the line in the sand, but while the Western COMEX was busy discovering a price of $104 during the plunge, the Shanghai Gold Exchange was a different world. The Shanghai premium has exploded to nearly $14. While New York was panicking, Asian buyers were paying $112 per ounce without blinking. We are seeing a two-tiered reality. In the West, they trade paper promises. In the East, they trade physical atoms. The gap between these two is the smoking gun of a failing system. Why did it drop from $118 to $104? Was it a lack of demand? No. On January 7th, the CME Group, the controllers of the paper game, raised maintenance margins by 47% to $32,500. This is what we call a kill switch. When the price gets too high and the bullion banks are trapped in their short positions, the exchange changes the rules. They force the small hands to sell by making it too expensive to hold the contract. It's a mechanical reset designed to protect the banks, not the investors. Think of the silver market like a house's plumbing. The paper market is the digital gauge on the wall. The physical market is the actual water in the pipes. Right now, the gauge is spinning wildly. $118, $104, $113. But if you try to turn on the tap to get actual metal, only a trickle comes out. London and New York inventories have plummeted since 2020. The bridge between paper promises and physical delivery has collapsed. When an industrial giant, a solar firm, or an AI data center provider shows up and demands their 20 million ounces, the paper gauge won't matter. Only the atoms will. They smashed the price to $104 for one reason: to make you panic. They want you to see the red candle, feel the fear in your gut, and hand your wealth back to them at a discount. If you sold at $104, you handed them your future. If you held, you won. The RSI indicators showed overbought conditions, sure, but that's a paper metric. You cannot overbuy a metal that is in a structural deficit for 5 straight years. This isn't a meme stock spike. This is a structural re-rating. They are trying to shake the tree, but only the weak fruit falls. The window is closing. We are witnessing the great decoupling in real time. The physical market is separating from the paper market, and once that cord is cut, there is no going back. The question isn't where the price goes tomorrow. The question is, do you own the atoms or do you own the promises? Make sure you are on the right side of the fence. Join the movement, subscribe to Wealth Unwired, and secure your position in the resistance. The truth is unfolding, and we are the only ones documenting the evidence. Stay vigilant. Investigation closed.